Yeah, hopefully sound should work now. Let me just check. Testing 1, 2, 3. Yes, got it. Bingo. The magic of resetting all these audio amplifiers. Anyhow, let's go. Big show. We're going to be talking about paper Bitcoin. A lot of people are very concerned about that. We're going to talk about how you can turn 10K into 100K or 100K into $1 million. What approach I would take, despite the fact we've had some crazy results over the last year or so. Bitcoin and everything else is boring, but there's also another interesting question. What will hit first? $1,000 Tesla or $100,000 Bitcoin? We examine that too. We look at some AI stocks. We look at Enphase price targets. We'll look at a new miner out of the UK. And what else? Bunch more stuff. Let's just jump in and go through it. Oh yeah, Solana is a layer 2. And it's crazy. Anyway, big show. As usual, 50 nuggets. And let me try find my slides. There they are, hiding in the background. So let's, of course, everything I say is just edutainment. I'm just a guy on the internet. And a big thank you to everybody on Patreon for the questions. They get better every week. And therefore, you all enjoy. So appreciate the likes in advance. So very first question is from a nice guy. What comes first, $1,000 Tesla or $100,000 Bitcoin? Ooh, I think about this all the time because, you know, you want to be on the quicker horse and get as much as possible. So let's look at one thing we're working on right now. This is what we've been kind of playing with. And this is an amalgamation of many previous models all rolled into kind of what we call the ATR model. And it's basically what I refer to as an augmented trading range. And this is for Bitcoin. Now, the simple thing you can see here from this is, well, where are we right now in the cycle? We are at level 2 out of 6. So the question is, how high will we go? Will we hit $100,000? Or will we just tap out at 70K? Because of paper Bitcoin, all the stories today are very interrelated. So you're going to hear me cross-referencing many different questions as well as we go forward. Red Hat, appreciate you as well. And hold on a second, somebody else. Cellar Door, what a cool name. I hope it's a wine cellar door. So that's Bitcoin. Let's look at Tesla and where Tesla is in the cycle away from all-time high. Here, you can see Tesla is already at level 4, despite the fact it's very weak. When you zoom out and get perspective as to where it is, there's only 2 more levels for it to get to an all-time high, whereas Bitcoin has 4 more levels to get to an all-time high. So this is important to take into account because if you imagine Bitcoin at level 2, Tesla at level 4, Tesla is running harder and faster, but it's run hard already. So technically, it could have a less of a hill to climb to get to that all-time high. But let's crack out another view of some different numbers and get a feel for how I would approach it. First of all, Bitcoin to 100K, divide by the previous all-time high, 69K, is a 1.44x. I hear a lot that people say the all-time high was 67K. No, it's not. 69K was the previous all-time high. And then Tesla, to hit $1,000 divided by their all-time high, $415, is a 2.4x. So Tesla has a bigger hill to climb, assuming it hits the all-time high, but it is closer to the all-time high. So therefore, I would say Bitcoin will hit 100,000 first. Remember, I'm not saying it's going to hit 100,000, but if Bitcoin hits it this bull run, which is not a lock, everybody. It could be somewhere between 70 and 120K. I think that's a pretty solid range to target for. And we'll have tools and techniques to be able to lock in profits. We will not be caught out this time around. And also Tesla, that's a different situation. Because if Tesla hits FSD level 4 with version 12 and launches Optimus, Tesla hits it first. Tesla will hit $1,000. The question is when. Bitcoin will hit $100,000. The question is when. And if the spot ETF is approved, again, it's huge. And I try and calculate all the different tailwinds for these assets all the time, and which ones will hit first. Either way, super interesting. Now, one thing that did get released like 10, 12, 15 hours ago was a new demo. And I'll drop the link below in the timestamps. But this is the new Optimus demo. It is mind-blowing. And a lot of people say, oh, well, Boston Computer, etc. Boston Dynamics can do that, etc. But what is amazing about this is the dexterity and the ability to learn and adapt and decipher and stay focused, decipher colors. You know, the subtle difference between a green and a blue or a yellow and a whatever. And that is powerful because it has the neural network based platform that can learn new tasks by watching videos, just like the car. And that means the Tesla bot is not limited to tasks it's specifically programmed to do. This is a game changer. This is what other bot manufacturers do not have. This is what people fail to understand. This is huge. And if you just look at the dexterity of the fingers and how they just turn over the little box, I mean, it's unbelievable. It's better than a 2 or 3 year old human can do in some cases. So stunning. If this hits, and there's so many tailwinds as well for Tesla, you know, the Cybertruck and FSD and this, then it's a game changer. And if next year they showcase the new Model 2 car, anyway, it's just exciting. So it's just a waiting game, everybody. And people are impatient. They want the results now, but we'll also talk about patience and the importance of that later too. Next question, which caused a lot of consternation in the Twitterverse, was Willy Woo and his claim about paper Bitcoin. And we're going to dive into this. And I covered this as well, the impact of futures on Bitcoin a couple of weeks ago. But this is a second cut. Now, 2 people asked this question. One was Empyrean, and the other one was the Pope. Hey, Pope, good to see you here. Could you estimate how much Bitcoin spot price is influenced by futures trading? And it said that gold price is manipulated down through futures trading for decades. Couldn't the same happen to Bitcoin and threaten its hard money status? Okay, we'll dig into that. And Willy Woo fears the cycle may be rife with price manipulation from the futures market capital flows, as its volume exceeds spot so much right now, messing up the trend line because everyone seems to expect here. What do you make of his arguments? So let's go and talk about where we are with everything else. First of all, a very quick refresher. What is paper Bitcoin? So basically, paper Bitcoin is a term used to describe a Bitcoin that exists in the form of derivatives such as futures, contracts, and options, and even options on a proxy. I'll show you a case of that too. And these derivatives allow investors to bet on the future price of Bitcoin without owning any Bitcoin. I'm also guilty of that, by the way. You don't necessarily have to own spot to ride the train. So the other key point as well, how futures impact price discovery. Let's break this down. So paper Bitcoin can affect price discovery in a few ways. One, it can create that false sense of supply. People can buy as many contracts as they want. And when investors see that there are a large number of paper Bitcoin contracts outstanding, they may think there's more Bitcoin available than there actually is, which could dampen excitement. Second thing, paper Bitcoin can be used to manipulate the market. For example, a large investor could sell large quantities of paper Bitcoin contracts to drive the price down. That happens in gold all the time and has been happening for decades. And this could make it easier for them to buy Bitcoin at a lower price. A lot of people fear that BlackRock coming in will try to smash the price down and grab it. But we have a little ace in the hole, and that is long-term holders have nearly 80% and they are not selling. They didn't sell through the dip to 15.5, and they're certainly not selling now before the halving. And the third reason is it can reduce demand for spot. So let's jump into an example with MicroStrategy. I, in full disclosure, traded a lot and have done so ever since they started buying Bitcoin. So here, MicroStrategy is an example of what I call a second derivative. And it gives the buyer the right to purchase the asset, which is MicroStrategy stock, which holds a huge amount of Bitcoin assets, and at a specific price, a specific date. We've covered options before. But the value of MicroStrategy stock, and hence the call option, is highly correlated with the price of Bitcoin due to MicroStrategy's substantial Bitcoin holding. And buying a call option on MicroStrategy, does it impact the price of Bitcoin? I don't think so. I think it's completely separate. And therefore, you are betting on Bitcoin's value increasing without grabbing supply. Imagine I want to run out and buy 100 Bitcoin. That might perk up the price a little bit. But if I buy, what would that be? 100 contracts or whatever it is of MicroStrategy, that will not affect the price of Bitcoin whatsoever. And that's kind of the key thing. And that's what people are concerned about. It's like everybody's going to trade this by buying paper versions. But the real question that actually came up was, how big will it be? And how much dilution of price action could come about? So this is kind of Willy Woo's chart, but it's modified by the rational root. And Willy Woo said the futures trading could dilute Bitcoin supply by 20 to 30%. So imagine putting that in context. I buy a contract of MicroStrategy, which is 100 shares, equivalent to about 1 Bitcoin approximately, instead of buying a spot Bitcoin. If I buy thousands of them, it doesn't affect the price of Bitcoin, but I do have exposure to Bitcoin. And this is what they're talking about. But Willy Woo believes that this futures trading could dilute Bitcoin supply by 20 to 30%. The rational route argues, and he extended the analysis to include a comparison with both highly liquid and liquid supply, and found that the dilution range is more like 10 to 20%. Again, I go back to these long-term holders that ain't selling. So there's very little liquid supply out there. And this suggests that the impact of futures trading on Bitcoin supply may be a lot less than previously thought, which could have an impact for Bitcoin's price. And in simpler terms, put another way, futures trading could make Bitcoin supply seem bigger, but by less than some people thought. And net, it's still a good thing for Bitcoin, because if you want institutional investors to come in, they have to hedge their risk. They need these futures contracts. We'll also talk more about maximum pain price and related to futures contracts and related to TA2. So every question I think today is interrelated. So the next one is from Large Marge. Do you think that VB, which is Vitalik Buterin's pro-Solana statements in early 2023, could have been an indicator that he wants to keep Solana alive so ETH could do a joint venture with it, or other incorporate some SOL scaling functionality to solve ETH's high gas fees and low transactions per second, which will enable ETH to maintain its long-term appeal during the next bull run and leading L1 status? So also a shout out to Royal Councils that had some very good thoughts on this too. But my perspective is a little bit different. So yesterday I did cover the impact of all the activity happening on SOL, including Eclipse, Solang, and a bunch of other stuff. We'll touch on that very briefly again. But before we do, Buterin on Solana, what did he say in early 2023? He said Solana was the most scalable blockchain he had seen to date. Second, he said that Ethereum needs to scale in order to remain competitive with other blockchains such as Solana. They were kind of his words. And he has been kind of raising the alarms, kind of sense of urgency around solving the problem of scalability and fees for ETH as they go forward. So let's talk about what this whole question is about. Is could Solana be a layer 2 on Ethereum? So layer 2 is like Arbitrum, Optimism, Polygon, we know very well. It's a network built on top of the blockchain to increase throughput through a whole bunch of different mechanisms. And then you have your layer 1s like Solana and Bitcoin and Ethereum. But could Solana also be a layer 2 on Ethereum? And the answer is it's already happening. We covered that yesterday. So let's talk about some of the stuff that is happening. The Eclipse use of Solana's virtual machine SVM is crucial for launching Ethereum L2, addressing high fees and low throughput, the same stuff Vitalik spoke about. Also, SVM allows parallel transaction execution. You'll still have ETH as the base layer. And then Eclipse's integration of SVM offers Ethereum users faster, cheaper transactions. And also in July, Solang came out. It's a hyperledger, and it's a compiler that enables developers to build projects on the Solana network using Solidity. And Eclipse, again, combines the Ethereum ecosystem with Solana's execution. So the only simple way to think about it is you execute your transaction on this L2 or Solana, whatever you want it to be, and then the base layer will store the activity, Ethereum, and that's not going to change. I think it could be a very good marriage made in heaven. I don't think Vitalik wants to partner outright with Solana, but things are open in technology, and open multi-chain capabilities are coming our way. There was also a lot of talk earlier this year about Solana becoming an L2 on top of Bitcoin. That could also be possible. Who knows? That would solve a lot of problems, especially around things like micropayments. And there was also a big release about that as well this week for Solana. New version of micropayments. Okay, so it'll operate like a credit card where transactions actually are reversible if there's fraud or something else. Anyway, more on that later as we find out more when it launches. Next question is from Webby. And Bit Mining are collaborating with Chain Reaction at $2.62. It is off the floor. What are your thoughts, and what does your new beta indicator suggest? Morgan Creek invested in Chain Reaction another plus. So first of all, let's look at chain reaction and what that is. And it is a tiny little company of 7 employees that believe they can crack the code and how to make certain things happen faster, disrupt blockchain and privacy technologies. I don't put much heft into that tiny little company. There's a million of these out there, so that doesn't impact the whole what's called bit mining. There's so many bits this, bits that, it's hard to remember them all and get them correct. So this is the new model, the ATR, as you mentioned. Off the floor, well, it does have a hardcore zombie coefficient. So yeah, it doesn't look too hot there. And when we look at the financials, it doesn't get much uglier than this. Again, it's just ugly. They keep paying themselves a ton of stock-based compensation. Net income is massively negative, and they have debt and everything else. It's just no. If a mining company is not already mature and running at full speed at this stage of the game, it's not going to make it, I don't believe. It's like, imagine April 2024 is like a wall, and you decide just to start running 2 feet in front of the wall and hit it to break it down. It's not going to happen. You need to be running for about 100 meters, full momentum, bang, hit it hard and break through. That's the way I kind of view the whole mining world. Anyway, next question is from Elliot A. Can you tell us what your strategy for Enphase is? What is your target price to sell? What's your 2025, 2027 target? So I do believe everything kind of mean reverts, with a peg of 0.8. Enphase is very, very strong investment. They are still growing despite the economic conditions and high interest rates and everything else. But everybody wants their solar. Everybody wants to be self-sufficient. Everybody's seen the massive increase in kilowatt-hour electricity prices. And Enphase are also expanding in Europe. Big time. So places like Germany, etc. So my target for Enphase by 2025, it's hard to go out to 2027, is $260. And it's trading at about 120 right now as we speak. So that's not bad. It's more than a 2x. But again, it's an options play. I'm willing to be patient. I'm willing to wait to 2025 and see what happens. And that is kind of my strategy. And it's just a very small position compared to my other positions, but I'm beginning to layer into different assets right now to kind of do a little bit of diversification, but not too much. I still have my big core, hardcore, high conviction positions out there that you all know. Next question is from the J. I hinted at this earlier. What are your thoughts on using max pain options theory as part of a trading strategy as a form of forward-looking indicator, combining it with other elements such as TA, which are inherently more lagging indicators? Great question, and I have thought about this a lot over the years. So first of all, max pain and TA combo, can it fly? Well, yeah, max pain is forward-looking, yes, but remember, it's there for a certain reason. It reflects the expectations of the market participants about the future price, or more importantly, the hedge levels for market participants. So for example, if the max pain price is significantly higher than the current market price, it suggests that market participants are expecting the price to rise in the future. Conversely, if max pain is significantly lower than the market price, it suggests that the market price participants are expecting the price to tank in the future. And combining max pain and TA, interesting. Possible? Yes. But let's dig into how max pain can be actually very misleading as well with a chart. So this is the max pain for June 2024 for Bitcoin. And you can see here, the max pain is 27K. This is the issue. So do you think the Bitcoin will be at 27K, basically $500 more than it is right now, 3 months after the halving? The answer is no way in hell. Unless, of course, some really severe black swan happens like WW3 or something. There's no way this is correct. Remember, this is where the institutions leverage these tools to place hedges, and they want to protect themselves from any downside below 27K. Therefore, this may not be indicative of where the price is going. And Bitcoin is a classic example. So, and the people that buy these tend to be institutions as well. So they know what they're doing, but they're not speculating. They're protecting current investments with a hedge position. That's important to realize too. Next question is from Josh R. I love your Arb Cloud tool. Could you share if you typically use it on the 4-hour or the 1-day? Tight, very tight? Yes, I can indeed. So the Arb Cloud is a tool that we built, and many people in the community are using it to great success to play the deltas, the arbitrage opportunity between the Bitcoin price and the MicroStrategy price. And it's the gift that keeps on giving. So let's look at how it works. So first of all, I do start with the daily for the macro view of where we are and where we've come from. Very important to zoom out if in doubt and find out exactly what the cycle looks like. Then the settings, by the way, for this, I have an intrinsic value of 0.2, which is $200 million, 0.2 billion. I look at the 60-day as the length of the time frame for the actual model to churn. And I use a very tight cloud. So the cloud is the green thing you see there. So there are my settings. Then I jump in to the 4-hour. And remember, you are looking at a proxy of Bitcoin. You're not looking at what MicroStrategy does. You know, if they have earnings good or bad, it doesn't make any difference. It's the price of Bitcoin that drives the price of MicroStrategy. But the markets have a hard time calculating the true value. Therefore, you need this. So always watch. Keep your head out the window of the car. You know, you're looking at your MicroStrategy dashboard, but out the window of the car, you got to watch what's happening to Bitcoin, where it's going, and where it's trending as well. Like if you look at that 26.5 level now we've been at for a long time. A little spike today, and then right back down. It's just, you can see that it's probably being manipulated by the same people that play with this type of stuff too. So there are the settings. So after the 4-hour, when I choose to strike, and I did last week using this exact same tool, I zoom into the 5-minute or the 15-minute, depending on exactly how volatile things are. If things are more volatile, I go into the 5-minute, and then I choose my spot. Right now you can see the Arb price. The bottom band of the Arb price is 232. So did I get that right? No, sorry, 323. I can't see those little numbers. I should have known that anyway. Getting them backwards in my head, but that is where we are. And then the Arb price is about 351, depending on my settings. So that's how I play it. And I spend a lot of time in discourse under this indicator support. There's a lot of gurus like G. Dinero and others that are making this very successful. They got backtesting models and stuff as well. Check those all out too in the community. Next, wannabe millionaire. Wondering if you may be able to dive into another AI play, C3 AI, and see if it may be worthy of an investment. Aha, let's go. So I know a lot about this company. I have friends that worked at this company that just quit recently and ones that were there way before. I know the CEO, Tom Siebel, and there's some little bit of consternation about this. So back in June, summer 2023, an investor lawsuit against C3 AI says Tom Siebel and other executives misrepresented in a partnership with Baker Hughes ahead of the company's 2020 IPO. And in an exclusive interview with CNBC, Siebel denied the allegations and touted as artificial intelligence technology. And remember, since the IPO, C3 is up and at a huge pop as well with all the AI hoopla this year. But there's other things as well. There's, I can't remember that short analyst. He went after them too, saying they're overstating numbers. So where there's smoke, there's fire. Stay away a little bit. But let's look at some numbers. So considering all the AI hoopla, the revenue is pretty much flat since 2021. That is not a good sign considering where we are. You compare this to NVIDIA, there's no comparison. Net income, very, very negative. EBITDA, very negative too. And more of a detailed stuff. You can see here, stock-based compensation, massive, running 50 to 60 million a year. Pocket lining, I don't like that, as you know from this channel too. It's amazing. They make operating cash flow. They're paying themselves twice as much as they are making operating cash flow, and the losses are terrible. So would I buy this stock? No, it's a very hard pass. And yeah, and I know it better than you'd imagine. I know a lot more than I'm letting on here. So next question is from Preston. Went hard and heavy into XBT provider Bitcoin and Ethereum ETNs in a SIPP prior to purchase being blocked by the FCA. A SIPP is a British retirement, self-managed retirement account. And what impact do you perceive on these types of trackers post-spot ETF, particularly given the high fees on these products? I'm already heavy on Bitcoin proxies such as MicroStrategy. Well, nice work there. So there's a couple of things to talk about One, you are comparing an ETN, which is an exchange traded note, which doesn't kind of trade in retail, with an ETF. So they're very, very different. But what I think will probably happen, the impact of the ETF when it comes, as already exists in different parts of the world that are a little more advanced. But I think there's a couple of things that'll happen. One, liquidity and volume. Spot Bitcoin ETFs will attract more liquidity and volume, impacting the trading volumes and liquidity of ETNs. So they'll be harder to trade, harder to sell, higher spreads, therefore not good. Also, investor preference. People will prefer ETFs over ETNs because of more transparency, better regulation, better perceived safety, which could lead to, again, further reduced demands for ETNs. Fees and costs. A spot Bitcoin ETF will have lower fees compared to ETNs, making them more attractive to investors. Again, that'll tank them a little bit more too. Price tracking and accuracy. ETFs have better price tracking and accuracy in the underlying asset. Therefore, it makes ETNs less attractive. And market dynamics. The introduction of a spot ETF could alter the market dynamics, leading to more accurate price discovery and increased institutional participation, which will drive all assets up. But we're not sure if the ETNs will participate the same way. So if you can, maybe think about pivoting to another proxy as we go forward. But overall, if they are an ETN, they should kind of represent the price, but there will be some changes going forward, and I would not recommend aggressively trading them. Mr. Weston, good to see you. All right, next question. Lots of questions today. This is from Blaze, and I get this all the time. I got a question recently. I got 20,000. Please turn into $1 million for me. Who's like, and that was all stemming from a meta trade we did actually back in middle of October last year, which is nearly a year then since that trade that did do a 50x or 5,000%. But those trades are not the normal, and you don't want to put all your chips onto one trade ever, because you could blow yourself up. So your question is, Blaze, with all the knowledge accumulated over the years, what would be your best strategy to go from 100K to 1 million as quickly as possible? How would you do it, and how long would it take? And ditto from going to 1 to 10 million. So interesting question. Sorry, drinking some tea. Shout out to all the Canadians out there right now. So let's, first of all, I hate to throw cold water on the party. Yes, trading can be good, but remember, you need tools, a process, a very analytical skill set, extreme discipline and focus to be able to pull these rabbits out of hats all the time with great consistency. Investing is not easy. Just look at the pros who've been doing it for 30, 40 years. Sometimes they get their heads handed to them. But this is from Bob Parsons. If it was easy, everybody would be doing it, and you wouldn't have an opportunity. So the opportunity we have is we have an edge. That is data and tools and approach to the markets and research into assets. And you got to be in those assets before they pop. Get in early, get in hard, all the usual stuff I always say. But if it was easy, everybody would be a millionaire, and then we'd all technically be poor. So that's not the good thing. And remember, this is the way I approach the markets, and it's always the same all my life. Invest 80% of your portfolio. If you want to go high risk, pick winners in disruption like Tesla and other key AI stocks, but not the one we just covered. Also Bitcoin, Ethereum, and another winner, singular, joke. See if anybody can figure out what that one is that I think. And I very openly place my bets in a fully transparent way. Then you'd have 20% of your bag. So if you have 10,000, you'd put 8,000 into this disruption, or if it's 100,000, you put 80,000. This is your safe nest egg. Yes, it'll be volatile. Things will go up and down, but it's safe. The odds of, say, 2 or more of these things blowing up and going to zero are small, but the odds of them doubling or tripling are huge, and therefore you calculate your expected value. And remember, investing, it's not the more you add speed to your investment strategy, the more you increase your chance of having a crash, just like in a car. And if you crash, you can wipe yourself out and lose everything that you have. You don't want that to happen. It takes a lifetime to build a bag, and it takes a second to lose it. Next, use 20% for speculation. Start with covered calls. Cover that many times. Then maybe leaps, on stocks that are beaten down, like buying leaps on Tesla at 104, 110, 115, were complete no-brainers. Same thing with MicroStrategy at 190, etc. Then you get into more sophisticated option strategies that we cover in the channel. But remember, do not do the GRQ. I actually made a April Fool's video a couple of years ago about GRQ token. Get rich quick. It was all a joke. GRQ is the kiss of death. Okay? You can get lucky, but most people who get lucky fast lose it all again the next day. So just be careful. Slow and steady, 80-20 is the way to go. And build yourself a plan, build yourself a goal, a time frame, and chip away. And then practice your art. Remember, if everybody could do it, everybody would do it. It's not easy. But with discipline and tools, you can make it happen. Next question is from Genkilad. I'm considering staking to maximize my SOL returns. However, I noticed many staking servers like Lido and JitoSOL seem to be trading at a premium. Can I ask your opinion on the best staking providers? And if you think it's worth staking given the said premium? So I like to do things direct when possible. Cut out the middlemen and stake directly. And you can stake directly on a number of different places. I like to do it at places like Phantom, for example. If you shouldn't hold anything on a centralized exchange, but Coinbase will pay you about 4.5% if you have your SOL just sitting there. And that's kind of automatic for many. But remember, I could give you the names of the place where I stake, but there's always a risk that one of these things could blow up, could be hacked or go bankrupt, and you could lose everything. So the key is really to, as I always say, spread it all around and try not to have more than 10% in any one pool, any one proxy, etc., etc. That's going to be so important because things will blow up. You just don't want, if something does, heaven forbid, blow up, you're only down 10%. That's the key. So hope that helps. And also the community have a lot of their favorite places. Try to get as low a commission as possible, but not too low. And the best return as possible too. And there are some scams out there too. Places that offer huge returns and no commissions. Be careful, be suspicious. Go where the most of the tokens are actually staked. Next question is, if Tesla accepted Bitcoin again sometime in the future and restore their Bitcoin holdings, how do you see this impacting Bitcoin and Tesla price? From Xenon Fix. So very good question. So I think they will, but don't get too excited. So it's likely to have a positive impact on the reputation of Bitcoin. And the real question I have though is, who would actually trade their Bitcoin for a car? Maybe if Bitcoin goes from 25K to 100,000, people say, you know what? I want a new Model Y. I'm going to sell a third of my Bitcoin and I'm going to get the car. That's fine. That's profit taking, and that's also lifestyle. And it's important to live a little bit too. But I think the other benefit too is it would also lead to an increased adoption of Bitcoin by other businesses and communities and consumers, which is huge. So net, very, very good. If they went out and bought another $1.5 billion worth of Bitcoin, wow, with the scarcity right now, that would increase price. I've got this thing called the 21x multiplier, where I analyzed on-chain data and calculated how much the $1.5 billion increased the price of Bitcoin. And that 21x, I think, is going to be a lot higher now because there's a lot less supply available, particularly after the halving. So net, all good, but not the car selling thing, not too good. But if they pump $1.5 billion into, in fact, if I was Elon Musk, he's got $23.5 billion in cash right now, consider dropping $1 billion back in. Why not? Before the halving, he could front run BlackRock. That would be fun. And just to mess with the markets. And, you know, he's also proven that it is liquid. He can sell $1 billion like that, prove the liquidity of the actual asset. So, favorite part of the week, everybody. Thank you so much. That was 50 nuggets helping animals. Shout out to Patreon member A Kiwi, another great New Zealander who steered us in the direction of this organization that seeks to end the abuse of animals raised for food. And anybody who's seen how animals are raised in these places will never, ever touch them again. So don't forget to subscribe to the channel for if you're interested in getting smarter. It's a tough world, and it's going to get a lot tougher as we go forward. Lots of crazy things are happening. By the way, I tried to do a live stream as well of this to Twitter for the first time. We'll see how that turned out as well. But anyway, let's go do some questions. Thank you all for being here. Thank you to the mods in the chat as well. And all of our friends of the channel. One Brightum, in your best guesstimate, what do you anticipate the Tesla price when Bitcoin and Sol hits peak price this bull? I plan on moving any gains to Tesla after. That's a tough one. Again, it's funny you asked that question, because I kind of covered the kind of calculus behind exactly what it means. And that is, here, the Bitcoin, if it does, the multiple from an all-time high is 1.44. The question is, will it go 1.44 times more? If history repeats, yes, it will. There's a lot of negativity out there, a lot of naysayers saying it's not going to happen. For Tesla to go to $1,000, I mean, we're close to FSD version 12. Another fellow I know really well, Larry Ellison, he was at Oracle Open World in San Francisco. And he's also one of the biggest investors in Tesla. And he knows Elon going way back, early investor. I think Larry Ellison's the third biggest investor in Tesla. He said FSD is coming. And he said Cybertruck is the best car ever. And Larry Ellison's a car guy. So he has every car under the sun you can imagine. He always gets them first. And I wouldn't be surprised if there's a Cybertruck parked in his garage somewhere. So shout out to Larry. But the fact that Larry Ellison says in less than 12 months we will have FSD, that is huge. If that happens, we will just be coming off halfway, well, what would that be? 6 months, 5 months, 20 weeks after the actual halving. We will not, typically the full bull doesn't happen until about 6 to 8 months after the halving. So if FSD does happen and all the other tailwinds, and if they start, deploying Optimus bots, we're seeing $1,000 easy. And as Elon says, it just goes, the IRR of Tesla stock just becomes insane overnight because of the robotaxi functionality. So long-winded question. It's hard to say. It's really a function of what hits first. And this will be a game changer. And people aren't literally calculating the value of what it all means as we go forward. So that's how I'd answer that. It's a question of what hits first. And I do believe Bitcoin will beat its previous all-time high. Unless, of course, paper Bitcoin becomes huge. Then we just discovered why that may not happen. Seller Door, could you please consider supporting Comac Animal Clinic in Thailand? I've been there many times to care for hundreds of animals based off donations. Yes, we will. That's a promise to you. What we do, we have a team that researches these things to make sure they're not shady or scammy. But if you come with a good referral, we'll check it out, and you'll see that soon. Red Hot. Schöne Gruß aus Berlin. So cheers to you. Thank you for being here. Bomb Biggie. Hello, my friend. I missed the live show so much. It's been a while. Love the whole team, and to all my friends here. K8, Des, Cat with a K, Mad Cow. I'm sure I forgot some. Love you all. Thank you all as well. No more questions. So I'll see if there's one quick one left while I'm on a roll. Let me see. Yeah, the volatility of Bitcoin is just quite stunning right now. It is literally like a flat line. Siebel Ellison, and you don't know Elon? What's up with that? I don't know if that's about me, but I know these gentlemen better than you'd ever care to imagine, except for Elon Musk. But the other two I've been tracking for a long time. And a big thank you to Super Sticker as well. AC1, Investing KO, Signal 103, long-term holder. The T, Forrest M, KN, and Stephen Weston. Thank you so much. And tomorrow, DCA is on Ivan's channel, 7:30 a.m. Pacific, 4:30 Central European time. Thank you, everybody. Thank you for spending time with us too. Oh, there might be another question. Yeah, from Nick Teapot. Thoughts on Chainlink CCIP and their work with DTCC, Euroclear, and Swift? Seems like a pretty important shift in the market. It is a massive shift in the market. The only thing that it keeps me out, and I have extreme discipline, is the compendium score. Chainlink had terrible inflation. It's getting a lot better. Tokenomics are improving ever so slightly, but we need some type of lockup/burn mechanism to really make this work. The adoption by TradFi will be slow, but it's a huge step in the right direction, and they are the leading oracle. So it is exciting. I do believe right now Chainlink is a great buy at $5 or $6 and sell it at $9, buy it at $5 or $6, sell it at $9. It's kind of like one of those range riders that's been that way. But I don't have a position. I might if the tokenomics improve. But again, I'm very picky. Remember my 2% video? If you're not in the top 2% of assets, I'm probably not going to touch you. Pristine assets only, please, for us, because this is a serious game. Thank you, everybody, for being here. Thank you to the mods in the chat. I'll see you all tomorrow morning with Ivan and CTO Larson. Good night, everybody. Bye-bye.